Okay, welcome guys. G'day Aviator, Chuck. My trading system. Desi, how you doing? Okay guys, for this webinar, I'm going to highlight high level, because I've only got 45 minutes and I could talk about it all day. High level, how I like to trade, my trading strategy. Last year, I did a whole series of webinars about creating your own trading system, broke some stuff down, and a lot of people asked me about how what do I do and stuff, so I thought I'd just explain some stuff. Maybe some people can use some things as a template. But it's going to be rather high level because I've only got 45 minutes, but I'll be coming back for the monthly webinar for FX Street in March, I believe. And so we might use that opportunity to do the same thing, but 3 hours worth. So really break some stuff down. Okay, so you can have ask all your questions and serious things then. But for now, maybe to sit back, have a listen, ask questions if you see them about what you see, and we'll go from there. Basically, I'm just going to talk about this one slide and then maybe give some examples on charts and things. Okay. So let's get started. Now, any good trading system, you need a toolbox, right? You need some tools in it that it's like a plumber or a builder or whatever. You've got to have the right tools to do the right job. And it's the same in trading. And so my toolbox has all the standard things in it. I'm a big fan of market fractals, price action, dynamic support and resistance. That's been EMAs, like your 21, 55, what we use in boot camp. Also visual EMAs, like solid lines joining highs and lows, that sort of thing. Psych levels, pivot points, Fibonacci, all those sort of good things are in my toolbox, okay? And it's how I go about my day is what tools do I use, okay? So I rock up with my toolbox that I've developed over time to go trading, and every time I sit down in front of my charts pretty much, or every day, especially Asia, I suppose it's worth mentioning when do I trade. I live in West Coast United States, so I haven't got the world's best trading hours, and I coach for FX Bootcamp during Asia, and I'm not a night person, so I sort of do 2 sessions a day. I coach and trade Asia, and then I wake up in my morning and do New York. So I wake up early on my mornings and do New York. I pretty much leave the whole London alone. Okay? And so, especially during Asia, I sit down and I do bucket loads of analysis with my class. Okay? And it's there that I basically, just grab my drawing tool. It's basically, this is the flow of how things work, okay? And you've got to have it's very important as a novice trader, guys, you've got some structure to what you're doing. You're not just sitting down looking at charts and just like trying to channel the universe and hoping something comes out and speaks to you. You need to sit down, turn on your charts and say, okay, this is how I go through all my steps, and this is how I end up out the back with a trade plan that's ready to be executed. Okay? So this is how I'll just draw some lines on the charts here. So I sit down with my toolbox, and obviously I start doing my analysis. Okay? And it's from there I start with some high-level analysis to determine what's driving the market. Okay? Is it fundamental or is it technical? And I can usually tell. Okay? let's see if we can just grab a quick example. If I go to a 15-minute chart, see this sort of price action here, sort of lots of waves, wavy price action, okay? Technically driven, okay? If I see day after day of riding a 15-minute 21, like in this box here, this area, if I wake up and see that, I'm thinking fundamentally driven. Okay, fundamentals ride EMAs very, very quickly. Okay, so see this riding the 5 EMA here, what we call a boot camp? Riding the 5, keep riding the 5, a pullback, then riding more 5, riding the 5, riding the 5. To me, it's a fundamentally driven market. So if I sit down and see that, I'm going to adjust my trading strategies accordingly. Okay, so I sit down, my high-level analysis says fundamentals or technically driven, and that in turn is going to affect the type of strategy. If it's fundamentally driven, I'm going to be after a sort of very quick scalpy spot trade in the direction, most likely, of the fundamental drive. I'm not going to go against that. I know what it's like. G'day, Ron. I know what it's like to get run over by a steam frame or 3. Been there, done that. Okay? If it's technically driven, I might then be, spending a lot more time identifying support and resistance and planning around it. Okay? So I will, for example, let's go back to that Aussie chart. Whilst if I let me zoom in here and give an example. If I saw that we'd been doing this pretty much all day in green, I'm going to try and probably look to continue that trend because that's a fast-moving market, guys. There's a lot of people buying there very, very quickly for a reason. I might not have any idea what it is. I might have tuned into. I'm lucky enough to have Trade the News, or I might have read it in across Twitter or something. But I might have an idea of what's driven that. That the first technical level pullback, if it's fundamentally driven somewhere like here, I'm going to look to, basically make a quick scalp and take myself along. Now, if I feel it's technical, and I'm sitting down in Asia now, well, obviously I've got a deeper pullback. Well, I'm going to be looking for levels of support and resistance to trade off, aren't I? So I'm going to be looking for pullbacks on longer term charts, like if I pull up my 4-hour chart, and this is where all my fractals analysis and everything else comes in. This is where I draw pretty trend lines like this one. That would be support if we were to get down here. Okay, so technically this is what I would be looking at, but also I've got this one up the road first at the 4-hour 21. You'll notice that part of my analysis will be what's in control. So I'll be looking at this saying, well, we've been riding this 4-hour 21 every time I've been there, so why wouldn't it do it again in there? So I might look somewhere there for a trade plan. Okay, I might then bring my pivots out, and I'll go to the Aussie dollar. And what do you know, in that same place where there's a 4-hour 21, there is a green area in the pivots. So that's support in the pivot. So I start building trade plans around sort of confluence of support. Also lots of role reversal here. Okay. And then, this is how I start building my trade plans. I have a flow. I have these steps that I go through. Okay, I establish a bias using direction, obviously long, 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 long. Well, I'm just going to stay long. More people are buying than selling, obviously. So I'm just going to try support and see how that goes. I'm going to look for areas of role reversal, plus pivots, plus EMAs. Well, that 4-hour 21 daily pivots, this role reversal line I'm drawing here is all there. Okay. I'll then might even go to my weekly pivots and see if there's anything around there. That was 104.33. Sorry if I'm going a little fast with people who are just trying to get this out there. Okay. Well, if I zoom in here a little bit, without getting rid of too many of my trend lines, that similar area is our weekly central. So there's sort of a zone building here of the daily extreme, weekly central, that role reversal area, the 4-hour 21. Get what I mean? I'm establishing the next area of support, technically, for me to go, hello, confirmation of some nature, please. Thank you. Have a nice day. Can we do that? Okay, so through it all, I sort of establish I'm trying to use my analysis to establish a bias, which is obviously following this sort of flow here. Okay, if I can't establish a bias, guys, I'll sit on the sidelines. Okay, I won't do anything. We'll move on to another pair. And then I'll look for multiple areas of support. Okay, one thing you'll notice is I'm already looking at, we were looking at this in class today. I'm in the midst of building a trade plan, and I'm absolutely hours away from this thing happening. Hours. This might be a London long, this could be a New York long, I'm not sure. But this is the zone I'd like to long it in, and it's hours away. I'm not chasing price. I'm not, oh my God, where's the next trade right now? Is it here? Take a shot. Lost. Damn it. Is it here? Take a shot. Lost. Sitting back, establishing that this long-term flow is in this direction. Okay, just looking to long. Can I get something like that in confirmation in an area of support where there's multiple areas and look to long? And that's where I go back to the toolbox, and I've got my Fibonacci's, my visual support and resistance, my dynamic support and resistance, my psych levels, pivots, all that sort of good stuff. And the more areas of those that line up, the more I'm likely to build a trade plan around it. Okay? Now, when I'm also doing that analysis that I was just showing there, I'm also deciding the sort of strategy. That's quite a deep pullback on that Aussie, you'll see. Okay? If I just go back to the GFT and look at the 4-hour chart again, if this is what we were looking for the long, something like this, I'm obviously looking for a higher high here. So that's to me, like a swing trade. That's something that you might get in today and hold on to for 24 hours. Can I go and make 150 to 300 pips long on that? Okay, so that, by the depth of this pullback here, and me wanting to long somewhere in this sort of area here, okay, that tells me, this can be a bit of a wide area, that's also telling me the fact that I'm looking at this sort of support on a 4-hour, that tells me that I'm actually looking at my strategy being a swing strategy, okay, which in turn comes into my trade planning area, and I have specific rules for that, okay? For example, for my swing trade, I'll look for a 15-minute change of trend, okay? I will look to take probably 2 or 3 attempts at longing in that area if I believe it's a good enough trade. Stops will always go below the lower low of a swing, okay? I look for price action entries in general. Profit will pretty much always get locked in around, on a swing trade, 30 pips of profit. And then I have, once it's been executed, I have rules about its management and how I'm going to manage that trade. Once it's off and doing its thing, I'll be looking for the major swings, things like this. Let me see if I can find something I'd look for. Aussie might not be the best example, but you know, once I get into a trade, let's say I longed down in this sort of area here and got long, well, I'm either going to sort of see how it's established in terms of what's holding its support, and then I'm going to just move my stop below it. So if I think it's 15-minute swings, that's what I'm going to do. Okay, if it's an EMA, that's what I'm going to hold. That's what I'm, you know. Oh, it's right in the 21. Well, I'll put my stop below the 21 until the trade gets cut. Okay, and then I might just make another trade plan in this case, pull back to support, long it again. Okay, that sort of deal. What's right, you know, once it gets to where I want it to go, you know, I'll just move my stop. And once it gets towards my target, let's say this area up here in the green box was my target. I'll just keep trailing, and then once it's reached my target, the stop gets really tight, like below a 15-minute 5 until it gets cut. Okay, so that's a quick how I would then manage things. You notice that I've got, like my strategy has, you know, everything's covered off. I have ways I do my analysis, then I do my trade, you know, decide whether I'm sort of technically trading based on fundamentals, then I apply a strategy based on what sort of level of support or resistance I'm coming off. I know exactly how I'm going to get in the trade. If it's a swing trade, I'll take a 15-minute change of trend. If it's a spot trade, I'll take more like a 3-minute change of trend. Okay, I didn't mention that before, I'll mention it now. Once the trade gets going in my favor, I'll look at what's controlling that trade. If I think it's an EMA of some nature, I might trail that. Otherwise, I'll trail, say, the major swings. And then once it reaches my target, or close to it, I'll tighten my stop so not to take, you know, get caught in a big pullback. Okay, there's no point, for me anyway, in my strategy, there's no point being 15 pips towards a target that's 140 pips away for it to have a 60 pip pullback to go there. A mixture, Chuck, I'll have a 3-minute chart, a 15-minute, an hourly, a 4-hour, a daily, weekly. It's sort of all at my disposal, floating around, and I'll do analysis on them all. Okay, and I quite often, if we just speak about analysis for a minute, okay, I'm doing this in class as well, but I'm doing a lot of like weekly and daily and monthly chart stuff, and I'm recording my analysis just to remind me that every time I sit down, you know, what am I looking at again on this euro? What was the big picture? What was the big direction I'm looking for? Oh, that's right. I think we're going there longer term. So sort of just quickly I'm able to, you know, find my feet with any pair at any time because I've already got the analysis sort of recorded, just taking screenshots and drawing on them and stuff. But I've got a wide range, and I like to, you know, obviously I like to use the longer term ones, guys. The longer the chart, like your daily, weekly, monthly, that's sort of more just establishing a bias. I'm not trading off them. As a Forex trader, it's very hard to trade off them unless you've got very deep pockets or you're just taking very small entries with giant stops. But a daily chart, for example, can give you an excellent bias. You know, the daily chart is swinging long. Just look for pullbacks and opportunities to long. Quite simple. Okay? And then trade planning done on more like hourly and 15-minute charts. And then take it from there. I like hourly charts, 4-hour, hourly, 15-minute charts to trade plan off, mixed with visual support and resistance, EMAs, pivot levels, psych levels, all that good stuff, fib levels. Yep, makes sense. Now, around all that, I'll mention this bit later, okay? But I have, a whole lot of trading rules and that sort of interlap with psychology, okay? If we let's go back to my Aussie trade plan here for a second. I'm looking to long, what did we say? I'm looking to long down in this area. All this roll reversal, 4-hour, in the 4-hour 21, pivot levels, all that sort of good stuff, okay? This is just an example, by the way, guys. Don't go longing here today without first doing some analysis and stuff yourself. Now, I believe as part of my strategy, my swings trade strategy, that's the area that it's going to get long from. I pick a zone, guys. It's like a 30-pip zone. Okay, it's not a line. It's like a zone. And I'll be waiting for a 15-minute change of trend somewhere in there. Now, what happens, I know, and this is where the psychology and rules kick in, okay, is that, just grabbing another color here, price might come down here and give me a rough time. I ideally want a change of trend. I want it to come down and give you this sort of deal. Oh, people are buying there. Thank you, support, off we go. I might long where I'm putting this arrow. Okay? But I know that sometimes that it doesn't do that. Price comes down. Oh, let me change tool. It looks like it's changing trend. And then, I take my shot and then it just sort of comes down a level. And then there you go. I'm not going to talk about a euro or anything right now, guys. I'm here to discuss a specific thing, all right? If I get time, I'll do a quick analysis of how I would trade the euro. And then it might, knock me out, then go and do what I want. So I'll then just line up again. This is where the psychology and rules come in, is when I've found a good enough rock-solid zone of what I think support, I'll afford myself 2 or 3 goes at it. So this first trade might, be a minus 20 pip loss, but the next trade will end up being a winner, and it goes to the target. So that ends up being plus 150 or whatever. Okay? But this is very important. With the psychology, guys, is that sometimes, if you give yourself 3 goes at it, you get a loss and a loss, and then you sort of got to pick yourself up and get in it again, and that's one of the hard things in trading. And that's why, I'm very, very particular, and it's a very big part of my strategy, is the psychology and the rules around it. On a spot trade or a scalp spot trade, something on a 3-minute entry, I might afford myself 1 or 2 little shots at it, risking like 10, 12, 15 pips a go. But then on a swing trade, I might allow myself 2 shots at it, but 20 to 30 pips per trade entry. And then I've got all sorts of rules around, not counter trend trading under certain conditions and all these sorts of things. And, wrapped together, it helps keep my trading strategy sort of heading in the right direction. Okay. I also, no idea FX 007, there's a workaround. Wayne sent out a workaround. So, as I said, very big part of my trading is the psychology and the rules. Okay, and without it, I'd be sort of dead. If this was an aeroplane, you know, this red box is the computers that keep this thing flying in the right direction and autopilot and all that sort of deal, right? It's your, you know, you can fly along without it, but it's a lot harder and a lot more stressful, and you know, psychology is very, very important. The other things I do is I keep a psychology diary. So if I have a bad trading day, or days, or period, or whatever, if I feel I'm not trading up to my potential, I sort of look back on my trades that I've taken, and I sort of try to take the positives out of it, and I write, I'm able to take an honest, good look at myself. And if I'm trading like a moron, I'm very quick to admit it to myself. You know, if I take trades I shouldn't have because I wasn't patient enough, or I hadn't made enough pips this week, so I take something with a bit higher risk and it doesn't pay off, well, I tell myself, and I write this stuff down. And when I take good trades, I write it down. When I take bad trades, I still write it down, but I still try to take the positives out of it. You know, like, oh, you took 2 losses there, but the third one works. Maybe it'd be worth looking at your strategy to take, a third entry in these situations, that sort of thing. Or, that was a hard break even considering you're 50 pips up and it knocked you out to the pip and then kept going. And when you start seeing these things enough, you actually, that's what comes into your continuous improvement. And, this all leads to improvements here and sort of right through all your strategy, going forward. For example, one of the continuous improvements I'm looking at now is on the analysis side. I saw it and been working with my class, but I'm going through the testing and continuous improvement of it with my class right now. Yes, that's up to you. That's up to you, Lynch. I'll take pullbacks after confirmation. I don't just take breaks of support and resistance. I'm not saying it doesn't work. I just haven't really tested it enough. That's all. So, before I give maybe an quick example, this automation bit that's here, it's under testing right now, okay? But what I've decided is, and this comes down to the automation for me right now is based on this and this, okay? It's a semi-automation, if you like. So basically, what I'm looking at with this automation is, one thing is I'm not in front of the charts during European hours. And during European hours, there are some seriously good trading opportunities. Okay, so what my thinking was is, well, like I was just showing you guys, if I did analysis, decided on a strategy, and built a trade plan, and then I could see where I think it was going to get long or short from today, why don't I just get a robot to go and execute it and manage it for me? So I sort of do the analysis, build a trade plan, define an area that I think it's going to trade from, where it's going to get in, where it's going to go, the stop loss, the take profit. Absolutely, Mike. Absolutely. No, in my rules, Mike, no trade plan, no trade. You cannot have a trade plan. And a trade plan is an entry, a zone entry, an exit. You've made sure there's enough, you've done a risk-reward calculation to make sure it's worth it, like a 3-to-1 reward for your risk. So if you're going to risk 20 pips, 30 pips, you at least need like 90 pips, 60 to 90 pips profit. It also might include something like how you'd manage it. You know, all those sorts of good things. Okay? So that's where the automation is right now. It's, well, what if because I'm pretty handy. I would classify myself as a pretty good trader, but I would classify myself even more as an excellent analyst at the moment. And the reason why I classify myself as an okay trader is I'm just not able to get in everything I want because I'm not in front of the computer. Like, I will get a bit psychologically down and out if I trade Asia with my class and we go, oh, it's getting long from there. That's a trade plan right there. And the trade plan works, kicks off in London, up 150 pips, and I'm not in it because I'm sleeping. I get a little bit like, well, there goes New York, it ain't pulling back. No, I'll wait for another trade tomorrow, see what happens in Asia. Well, what if I can capture that through a robot? So that's what that's about right now. Oh, I'm sorry, David L. I'm sorry to hear that. But that's sometimes what it is, right? Right. So I'd like to make some trade plans, mark an area on a trade on a chart, and it sort of will take the trade based on my entry criteria, whether it's price action, oscillator, whatever. It knows it's allowed 2 or 3 goes at it. It knows when to lock in profit at break even. It knows when to move the stop. It knows when to get out of the trade. I did this last week. I'll show you. I haven't got it on this computer, but I took this. I'll show you with the trade plan we set up in last Friday. But we set this up last Friday in my Asia class. Okay? We said down here in this 154 sort of 50 area, a 3-minute change of trend, long. All our analysis showed it. Pivots, longer term stuff, everything, right? It just said, hello, do that, long. Okay? Well, I didn't know when it was going to get there. If we go to the charts for the pound, it got there, there it is. It got there in London. That went exactly to where we wanted it to. Okay, and off it went. Well, I personally did not get the trade. I know a lot of people in my class did, but I did set my robot that's testing up for it. Get in there, take a shot. You've got 2 shots at it. It took a break even, then it got in again, and went to its profit, 154.40 here. That's where I thought it was going to get out. So it managed to automatically go and get that while I was pretty much sleeping through most of it. I think I woke up sort of here where I'm putting the pink arrow, but the trade's, well in progress. So that's the sort of thing that automation, that's the goal of the automation, is to capture those trades in the direction while you're snoozing, and works pretty well. Okay, and yeah, just to finalize here, continuously testing and improving. Okay, Oh, and that'll be forever and a day. Can always look to be improving, and then testing those improvements, and then putting them in my toolbox for analysis or strategies or planning or execution. Yeah, and that's a huge part of things. Okay, so for the novice trader here looking for a system, I mean it's all very personal. I've mentioned before. You need to decide the tools you need to use in the toolbox. Okay, I've said before in past webinars at FX Street. I did that last week, David L. Thanks to kids. It's not fun after 48 hours of no sleep. So I'm considering, I've said in webinars before, in your toolbox, okay, there is no perfect set of tools or time frames or fractals or combinations of anything. Okay, they all make money. They can all make money. It's these bits here, these sorts of bits here, your planning, how you execute, your psychology. These are the areas that make the difference between a successful trader and not. If you read a Market Wizards book, you'll get a guy that uses Elliott Wave with fundamentals, and then you'll get someone who just trades fundamentals only and thinks technicals are rubbish. You'll have someone who just trades like very basic visual support and resistance and doesn't believe in fundamentals because they think they're most of the time already priced in. But what's important is the trend, okay? Long-term trend. Never go against it. Always trade in the direction of the longer-term trend and you'll be fine. You know, basically 101 technical or 101 different strategies all make money, all using different tools in a toolbox. Exactly, George. Okay? It's how you plan and execute in your psychology, especially the psychology around it is the big deal. Kim, you can either use previous areas of support or resistance, or you might use psych levels, or you just don't worry about it and you just move. You just assume it can go higher. One thing I might look at on a daily chart is, I have a daily chart here anywhere. Yep. Is, let's say this is going, right? Up and up and up. Well, you know, obviously in here is 85, a serious psych level. If it breaks 85, I think there's more chance it's going to go to 90. Okay, once it breaks, say, 92.50, I'd say there's more chance of going to 95. If it breaks 97.50, I think there's more chance it'll go to the psych level, sort of thing. I sort of go high level stuff. For example, on the trend to the downside, you know, once you've gone above, we're back above 77.50, we'll probably go to 80. We did. Okay, 80 in here. But if we go above 82.50, we'll probably go to 85. If we go, that's the sort of thing I look at, and just psych levels, pretty much. But if you know, if I was in this Kiwi long here, riding this to the long side, I wouldn't really care how far it was projecting. I would just be stop, 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 moving when I stop until it got plucked. And then just go, okay, new trade. Wait for a deeper pullback and plan accordingly, and off you go. Make sense?